Hi, my name is Blaine Pacelli, and this is my August 2016 Real Estate in August report. Happy August. If you have kids are going back to school pretty soon. Uh, the Bureau of Labor Statistics reported that U.S. employers added 255,000 new jobs in July. Expectations were in the 180,000 new job range. Job gains had stalled out at the beginning of the year, bottoming out in May when only 24,000 new jobs were created, the worst month since the recovery began. Jobs rebounded in June with a revised figure of 292,000 new jobs, one of the best months ever. And now in July, with 255,000 new jobs created, July marks 70 straight months of job gains. That's awesome. The only sector that lost jobs in July was oil and mining, as low oil prices have caused companies to cut production. The unemployment rate held steady at 4.9%. Hourly wages also ticked up slightly, bringing wages up 2.6% from last July, up from 2.2% from the 12-month beginning July 2015. Wages were increasing between 3% and 3.5% annually before the recession. NASDAQ and S&P all-time time highs. Stocks rose Friday following the announcement of an interest rate cut by the Bank of England and other measures to stimulate the economy in the United Kingdom, and the stronger than expected U.S. new jobs report that showed employers added 255,000 new jobs in July. Stocks had slid throughout the week. Last Friday's GDP announcement that the economy grew just 1.2% last quarter weighed on the market early in the week. Investors also pulled back due to falling oil prices, which slipped to $41 a barrel after hitting $50 a barrel in June. Oil was $120 a barrel only 2 short years ago. A steep slide bottoming out at $28 a barrel in February. Oil prices had been cut on the rise until slipping over the past few weeks. The Dow Jones Industrial Average closed last week 18,543.53. The S&P closed the week at 2,182.87, and the Nasdaq closed at 5,221. Bond yields rise. Investors move funds from bonds to stocks, pushing rates up. The 10-year U.S. Treasury bond yield closed the week at 1.59%, up from 1.46% the previous Friday. The 30-year U.S. Treasury bond closed at 2.32%. Mortgage rates follow bond yields, so we can watch bonds yields closely. Mortgage rates rose with bonds at the end of each week. The Freddie Mac primary mortgage survey released on August 4th, 2016 showed the average mortgage rate from lenders surveyed for the most popular mortgage products were as follows. The 30-year fixed rate average was 3.43%. The 15-year fixed rate was 2.74%. 5-year 1-arm average rate was 2.73%. Rates were about 1/8% higher by the end of the week. So get ready for the next week to reflect that. The houses right now in Sherman Oaks and most of LA right now are kind of steady. They're not rising, they're not falling. The mortgage rates are amazing. One of my clients just got a 30-year rate for 3.25%. I mean, that's incredible. But a lot of people are really unsure what's going to happen with the presidency. I mean, who's going to become president? So some people are holding off and waiting to see. But when the new president does come in, the interest rates could start rising, which is going to affect a lot of people's buying power. So enjoy the rest of your summer, and I'll talk to you next month. Have a great one. This is Blaine Pacelli. Bye-bye.